The largest deposit was $500 million.
Whoa. Welcome to The Local, where we have great conversations about everything crypto, everything about building in the space, and interview and chat to great guests. Today I'm joined by Itamar Lesuisse. Itamar, tell me about yourself, tell the audience about yourself. If they haven't heard of you before, what do you do in crypto?
Hey Tim, thanks for having me.
Pleasure.
So I'm the founder of Ready. We are an on-chain alternative to your bank, basically.
Okay.
So some people
That
will
good.
call that
right. I'm signed up
crypto
already.
neobanks. So really, it's very simple, is put money in the system, deposit, earn, grow your wealth, and then being able to spend that money. Yeah.
And the value add there, the USP is that it's on-chain, it's instant settlement, it's secure. So
really what we see today, there's the short term, the long term. Today is really a lot of people are cut off from the financial system.
Yeah.
The most obvious use case for your audience is really people who invest in crypto. Mm-hmm. So you invest in crypto, it's time to cash out, and sending money to your bank is likely to raise 50 alarms, and they will block your funds for a few months, and hopefully you'll get your money back.
Hopefully.
With us, you deposit your digital dollar, your stable coin. It's there. Whether you deposit $1, $1 million, $1 billion, it's non-custodial.
Yeah.
No one will bother you with that. Then you get a card, and then you start spending with your card, whether MasterCard, Visa, and
that's fascinating. And let's say I wanted to move wholesale out of my traditional banking infrastructure, which I have and have had for 20, 30 years or whatever, and I wanted to move to Ready. Would I be able to port across like all my direct debits and standing orders? Does that sort of stuff work as well?
That's really where I want to go. So right now we're very card heavy. So retail payment with your debit card. We want every form of payment. So direct debit is a very good example. If you're in the UK, that's why people want, for example, for their rent or for their mortgage. We don't have that today.
Okay.
We think there's a path forward to get there.
What's the resistance? Is it the traditional system saying, no, we can't face this?
No, it's the payment flow. We have a design for that, but the way it works is really we have a stable coin account.
Yeah.
That's your bank account is actually a stable coin under the hood. You can then trigger bank transfer. Mm-hmm. The difference that direct debit is a pull from your account, so we need to work on the right security model, but it can be done. A card is also a pull rather than a push.
Okay.
The card is pulling from your account, so we know how to do it. It's just not been top priority because we have so much project. Yeah. We're working beyond card now, so bank transfer, but globally also to have things like Pix in Brazil or payment in UPI in India, etc. So there's a lot of different way to spend your stable. So that's really our focus right now.
And it sounds like the ambition is global and the team is global as well.
Yeah, so we're a global team, mostly around UK, Europe. Yeah. But the product is very global because we started really with an audience very crypto native, I would say. Mm-hmm. So people, at the end, more and more people have stable coins.
Yes.
And it's very complex to spend your stable coins because banks are resistance. They will cause a lot of problem if you send funds from Coinbase, for example. And so people can have stablecoins for many reasons. The most obvious one is they invested in crypto, then decided to sell their crypto. Now they're in stable, and that was really the first audience. And so they start cashing out. And that's a lot what you see let's say in Europe. But then, for example, if you look in Latin America, I just spent 6 months in Argentina. High stablecoin adoption, but for different use cases. People who decide who will be freelancer, for example, and they will work for foreign companies and they want exposure to dollar anyway. Yeah. And so they will just ask to be paid in dollar stablecoin. Mm-hmm. So at the end, same problem. Now they have dollar stablecoin, they want to spend it, but the reason they got stablecoin is different. And if you look at stablecoin adoption, we live in a world where people will one way or the other have stablecoin even if they didn't interact with crypto.
Yeah, we have that sort of as a thesis in the business that almost every representation of fiat currency will sit on top of blockchain rails at some point, so will inherently be stable coins, and users won't need to care or need to worry anymore because the adoption will happen at the infrastructure layer. That's fascinating. But I've gone straight ahead to what it is, but I'd love to hear about how you started. I mean, how did you become exposed to crypto and how did Ready become something you wanted to follow?
So I'm an engineer. I've been I've been in tech forever, probably. I was in the early days. I worked for Amazon.
Okay.
I worked for Visa in payment. That wasn't really my entry to crypto. I had another business. We were the largest mobile brain training game. So I had a company. Mobile brain training. So you would download our app. It was called Peak. You would download it, play games, pay subscription. We're a company in London. One day, one of my employees said, "Oh, you need to invest in that ICO." I'm like, "What are you talking about?" And I didn't have any money anyway. We were really lean, still spend all our cash on the business. That ICO was Ethereum, so I didn't invest. I didn't have the cash to invest.
Did your employee invest?
Yeah. No, he minted 2-3 Bitcoin, and then he invested all his Bitcoin in the ICO. So he didn't even have to spend money to.
Wow.
Yeah, it is fine.
He's fine.
Then we sold the business back in December 2016. And it was a while ago. So we sold that business to a big book publisher.
Yeah.
Then two things happened. First, it was interesting because the payment from a UK company to a UK company in dollar was frozen for like 6 weeks.
You're kidding?
So a multi-million-dollar payment.
Okay, hang on a second. I'm just going to get my head around this. So you sold the company.
Yeah.
UK-based company.
UK-based company.
Listing, blah, 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 to another UK company.
Yeah. But in dollar.
But in dollars because that was the share class, or
that was the deal. We had a mix of investors, so it was in dollar. The OFAC flag on the payment for absurd reason. Then you realize probably the system that created that was built in COBOL 100 years ago, because it was like some weird word matching. They were like, we need to. I think if I remember well, we had to give them paperwork because they thought we were a shipping company with boats and all that. So something.
Neither the company you were selling or the purchaser were crypto companies at that point.
Totally unrelated. We were a book publisher. It was Hachette, one of the largest French book publisher, and we were a game company. And so
that's frustrating.
It was like a crazy process, and we're like, wait. So for A, to send money to B, not only I kind of knew you had to ask banks for the right to spend your money. It's not really your money, but now we even have to ask two US banks.
The correspondent banks.
And so okay, that's interesting. So it was not yet my crypto moment, but then literally a week after the money comes out, I'm like, okay, I'm going to the employee. I'm sorry, okay, so what do we do now? And so I buy ETH.
Yeah.
Chose me. I set up a ledger. That's how you have to do. I make a payment. At the time, it would be like instant. It would cost less than a cent.
Yeah, very cheap then.
And I'm like, whoa, I just moved money. The only thing that happened is some cryptography, no middleman. I was like, that's insane. With, of course, the parallelism of 6 weeks earlier, I had that payment trauma. I went to my co-founder, Gerald, at the time. He was also my co-founder of a previous company. And I'm like, that's what we have to do.
Right.
That will change everything. And then with another friend, Julian, the third co-founder of Ready, we started thinking about crypto. We locked ourselves for a week in a room. And at the end, we had the vision. I think for us, the starting point was really me having the whole setup. It was like, there's no way we'll have a new financial system where everyone has to keep some form of secret. Illicit phrase. And if you lose your secret, you lose all your money. If I have your secret, I have your money. And so we're like, okay, this will be a revolution, but we'll actually have a few, like custodian will hold our money. It will be the status quo.
It'll be the same back to being banks.
You will ask you will ask permission to the custodian to use your money. So we'll be back to square one.
You have this wonderful paradigm of like self-custody and control, but fraught with risk by people holding their secrets to themselves and being in charge of the secret keys. I want to spin back to that room. So you locked yourself in a room for a week to think about what to do in crypto. And what I can have, my imagination is saying you're sitting there with white papers and boards and all this sort of
so
stuff.
literally we rented the room to be in a fully with a whiteboard and everything. War room. And at the end it was, I think we knew it started around, it was financial. You wouldn't even think. There was no, it was 2017 probably. There was no such thing as no DeFi. So you didn't have any protocol. You had Ethereum and you could move ETH.
Yeah, that was it.
That was it. And so, but we're already talking about ETH2 and staking. And so we had an entire model where how would we store the money? How would we would have savings account. That was staking. And staking came, I don't know how many years later. And if you still look at how we thought about models of like chargeback for payment because we would replace credit card and debit cards, really we had designed all of that. And I would say it's surprisingly close to what we do today. I mean, the pitch deck is still there. Of course, things have changed. Now we use stablecoin. Now we have protocols, etc. We didn't know we would use. It was, I think, first Compound was the first protocol we used for savings. And so things have evolved, but actually the vision is really the same. And we designed what would be a on-chain equivalent to a bank, basically.
And so it wasn't driven by passion for self-custody or anything. It was practical. It was like, I've had this horrible experience with the traditional finance ecosystem trying to move money from one non-crypto business to another, to seeing the possibility that comes with blockchain and
so I wouldn't dismiss the self-custody element. I think, but in our mind it was okay, this is revolutionary, we can move money so efficiently without middlemen. So it's true that the starting point is more, you have a net. Money is now part of the internet. It's like a layer on top of the internet. We can move money the same way that, like you don't feel the internet belongs. It's not true that the internet is fully decentralized, but you don't feel like the internet belongs to someone.
Right.
It's the internet. It's like water, it's like electricity, and
and data flows and information flows very cleanly.
And so why should money be any different? But I think we always have the feel there is probably no point if there's no self-custody. What's the
because as soon as if you don't have that piece, you're back to you might go to a more efficient version of what was there before, but at the moment you have to ask
exactly, which is a lot what's happening today. Exactly, and so self-custody was matter a lot, but we're also convinced it could not be with the current model or the model at the time, and so we started working on a new model.
And that was 2016, 17?
So Julian started before us. We were still with the previous company in 2017 and 2018. We really started.
That's amazing. And the high points, low points, there must have been many as a builder, regardless of whether it's just relating to crypto. If you've been an entrepreneur for that long, there must have been some very stressful times.
Very high, very low.
Very high, very low. What are some of the, let's talk about the good stuff. What are some of the highs that you've had along the way?
I think the early days were amazing. So in some way now people talk a lot about things like account abstraction, smart account. I would argue Julian, one of our company, invented that. The idea that the smart contract with all the funds, but the whole UX, it was based on a lot of existing ideas. There was SAFE and there multi-sig. Austin Griffith had done a lot of work on meta transaction, but this idea that you had an account, self-custodial, no seed phrase, we had no gas, nothing already in 2018. That's really this whole new package that we invented. And then the high was probably like a week after launching. A guy, we know him, he didn't know us at the time, we didn't know him, but put like $70,000 in the account. Okay. Literally, the feature we were building on that day was a little banner that says, please don't put more than $200.
I'm all in.
And so it's like, okay, we learned that in crypto people take risk and they try new stuff. And then the highs kept going till, I think one day the largest transfer was, the largest deposit was $500 million.
Whoa.
Someone 30 seconds, you get a phone. It's a phone. It's on your laptop. Already people are like, oh, you don't put crypto on a phone. Well, it's actually much more secure than a computer. No seed phrase, no hardware wallet, nothing. Set it up 2 minutes later, $500 million. And so we're like, okay, we've proven people can store money there. And it's safe and it's super easy, etc. The laws were that we were paying for gas. And now people were like, oh, you're crazy. I remember like the even more OG than us. I think it was...
the user experience is important.
It was amazing. I mean, people loved it. It was really, the early days were amazing, but then some people were like, but no, gas will increase, you're crazy. It was, I think, Taylor from Meta Wallet was telling us, be careful.
Be careful, yeah.
And we're like, oh, it's $1,000 or $2,000 a month. Like it's
manageable.
It's manageable. Yeah. And ETH2 is coming. So it's scaling. Yeah. It's fine. A few months later, DeFi summer, this $1,000 became almost $1 million, and we didn't have that much funding. And so that was
Yeah. Wow.
Like I would wake up, we had like relayers that manage those transactions. I would wake up 2-3 times a night to refund them, to top them up with ease, to pay gas, because we'd never build a system to automatically manage that, because what's the point? It's once a month. I had to send,
$1,000 a month, it's fine.
A few ease. So yeah, that was like, this was the law. It was brutal.
And so you mentioned that you're an engineer by background, by training. Do you think, I know this, like being a founder is different from being just pursuing the skill set that you're good at. So if you're a great engineer, you can take a lot of the things that you do on day to day and move them over to apply them as being a founder. But there's a lot of other stuff that comes with being a founder as well. Have you found that you still get to be an engineer at heart with what you're doing, or does the founder and running Ready does it take over?
I think in the early days of, a company, like when you are 5, 10, even 20, there's no CEO. CEO is not a job.
We talk about this. Yeah.
You're like, you might be the product manager, or you might be a developer, or we all had a different role.
Everyone's got stuff to do.
In that phase, I would say, yes, you leverage your background, your skills.
Yeah.
I would be more the product person. Gerald would be more the CTO because that's his background, and Julien would write smart contract. He would be our smart contract engineer, basically. I think after a certain time, everything changed. Now you worry about strategy, funding, and people.
Yes.
At the end, and so I would argue it's still leverage. I think there are. You need to fill some gaps on skills, but at least you're still solving problem all day long.
Yeah, which is an engineer thing.
Right? Yeah, so I would argue you leverage that skills, but then you have to fill up. I think, for example, people skill is probably more important when you run a company after a certain size. I would say we took every job in the company.
Yeah.
I've done marketing, I've done customer support, etc. And there was a time where we were still the best at our jobs.
Yeah.
And now I would say we have people who are better than us at those different jobs.
That's the idea. That's the pinnacle, right? You hire people that are very good at a particular thing and give them the remit to succeed and the space to succeed. Not always easy to do.
No, but...
yeah, and I could talk to you about this for hours. Fascinating. And so, what are the plans over the next 1 year, 2 years, 3 years? How do you see the space evolving, and how do you see your place in it?
So I think the space has changed, in my opinion, quite drastically. For us, we had almost to reboot the business. We were building this on-chain neobank, and then we hit a wall because no scalability, regulatory landscape made it impossible. And so for a few years, we were not that anymore, like a wallet, like almost cold storage for high value. And then at some point, the tech, L2s, scaling, regulatory landscape has changed totally.
Huge
we could have, our debit card, etc. And so it's almost like, we're rebuilding at high speed what we had started building before. For us, I think, and the evolution, I think, is that crypto now serves almost, it's not anymore just that cyberpunk parallel economy. And it's also this more efficient backend for Tradfi in some way, which I think was inevitable. We just hope it won't be just that. Today we see a segment really underserved. By banks can be very conservative, and basically they can decide to not serve you if they don't like you, and they don't like people investing in crypto. They might not like you if you're a creator of certain type of network. They might not like you if you gamble. There's many reasons. They might not like you if you are in the wrong political party.
There's a definite
in the
profiling,
UK, which is not about law. It's not about AML. It's just they don't like you, or they don't like risk.
And if you can't get a bank account nowadays, it gates you from so much of life, right? It's very, very hard.
And so I think, yeah, exactly. And so I think our job short term is really to think about email, where people might decide to use Proton Mail, or for messaging, they might decide to use Signal. This is already an extremely big niche. And so I think that's our step one. That's where we are today, I would say. It's really, can you be the Proton Mail of finance? And bring freedom to those people who are cut from the wall, and let's improve the product so they can spend not just in coffee shops and online, but also you mentioned for your mortgage or your rent, etc. And live out of
away
from this system. Then where we want to, the vision is, I think, really crypto, and you could argue crypto rails and AI will allow neobanks to just be an order of magnitude more efficient. And so a company that is crypto and AI native will be much more efficient. But that's not a user a USP per se. User probably will, I think, so short term, those audience that are really underserved and that have this need for freedom, then I think we'll get to a segment that will value reward. I think we'll be able to better reward users because we'll have a much more efficient system. So you will maybe have more cashback or more yield, etc. Until I hope in some years we are the next Revolut, but that's a very long journey.
Has it been hard to stay committed to it over the years? Because it sounds like it's sort of 9-10 years that you guys have been building and pushing this and driving it forward.
So more 8, not yet 10, but extremely hard. I think that a question often I get is, how many funders do you need? And I think the value of having more funders is you have statistically more chance that one of the three will not give up on that specific day. I always say that the business will die when the 3 funders will give up on the same day.
Same day, everyone's having a rubbish day. The same day.
The more you are, the better. So there's been a lot of high and lows. It's been very hard. I think now we feel again very good because, at the end, if your product has traction, if things are, it changed things. And so now we feel good. We feel that the big roadblocks have been removed. Again, as I said, the scaling tech, we think the time is good, basically. And when the time is not good, there's not much you can do. You might have a great idea, great team, but if the time is not good, you can't force it. Exactly. And so now we feel we have the team and the time is great. That's
fantastic to hear. And our areas of business that we have within low tech have benefited from the improved or more friendly regulatory landscape, but we're at least one step removed from the banking system compared to you guys. And I think, although it's tough in the market, and I think crypto as a whole is probably having a bit of an existential crisis. You alluded to it in terms of, it started as being a very cyberpunk type ecosystem and community, and it always had this financial application, and it was always, once it got to a level of technological sophistication, going to be sort of co-opted into some of the traditional infrastructure. And we see that happening. And I think that's causing some of the existential crisis amongst the original crypto cohorts. So like, well, this is not what we wanted to happen. Whether that will be something that comes back with a more favorable market, who knows? But it's fantastic to hear that you stuck with it. And I think I love the point about the 3 co-founders, maybe because we have 3 co-founders as well. But yeah, I can see that dynamic that if all 3 of you on a Monday morning say this, we're done. That's it. And so you must have traveled a lot with the business so far around the world. How do you think the view of crypto changes as you cross the globe?
So I do see, I would argue I have a good view of, if you take like Europe, UK, US, that's a bit one segment, and then Latin America, or at least some part of it.
Yeah, how was your time in Argentina?
For me, it was great because I could really see crypto. Let's be clear. In Europe, in US, crypto is an investment, highly speculative asset. So that's how people use it. And arriving in Argentina and see people who have stablecoin but never had crypto. They're also big in like Bitcoin, ETH, etc. But there's an entire segment. They just want dollar. It's just digital dollar.
You see the signs there. And USDT.
Exactly. So I would go get cash with USDT on Tron. I was like, wow, that was amazing. And you realize it solved a a real problem. And I think, so for us, that felt good. Also, at the end, for us, the same problem. It doesn't matter how you got your stable coin. We solve it. It's just that now it's a different. And so we also discovered that people who like to gamble online, but those platforms tend to pay them back in stable. And they're like, what do I do with the thing? And so at the end, it doesn't really matter. We see a lot of now OnlyFans creators because their banks don't like them.
Again, that profiling.
There's nothing. I mean, OnlyFans is now. It's not like you do ML or anything. They just don't like what you do. And so it was good for me to see in Buenos Aires really a totally different use of crypto. I arrived in Buenos Aires, and then for 6 months the growth in Asia went ballistic. So literally that was happened to us. And so I have less of a view there, but basically we started learning, do a lot of it to understand that they have, also they're more of a mix. There is some who's very speculative, but again, people basically who get paid. In many markets, they want exposure to dollar, and often as freelancer, people work more and more remotely and decide to be paid in dollar, or they will just get stablecoin because they want this dollar savings.
Yes,
because of inflation. And so we do see those patterns, very different use case in different segment, and some of them are really much less served well served than pure buying Bitcoin and ETH is now mainstream and very easy. In most markets, but there are many other things that are very hard.
I've had the pleasure of attending a few conferences over the last couple of years in different parts of the world, and it's always nice to see these different use cases and see the different approach to crypto as an industry as well. I've been pleasantly surprised. We're London centric as a team and as a business, and so I think I was a bit focused on London and Europe in terms of like who's using crypto in this space, who's building in this space. But as soon as you get to Middle East, Asia, when we went to Argentina as well, you realize that this truly is a global industry in a way that lots of others aren't. We're clearly based in London, and I'm chatting to you today in London. You mentioned, and we touched on the fact that you were in Argentina for a period. Do you like building in London? You find it easy? How much of the team is UK based?
So I love London. I've been here for many, many years.
That's nice to hear. We don't hear that very often.
My daughter grew up here. She feels Londoner, I think the ecosystem are very different. So our team is mostly distributed. It's fully distributed. We have a handful in London, but probably less than a quarter or a fifth of the company might be in UK. It's not our center of gravity. It's very distributed. But London is, I think as a city, you know how hard it is where you might meet friends, and if they live in the wrong place, it takes an hour and a half to meet them. And I think you see the impact on the community. Like in Buenos Aires, you go to the one co-working space. You go there, everyone's there, and 3 blocks away, you have everyone. It feels like you're in a tiny city, and it's not tiny, but it's everyone, the same neighborhood, very easy to meet. While for London, often I go to DEF CON, for example, I cross the world. I'm at a dinner at a crypto conference, and then 80% of the table is from London. And we have to go meet in Osaka or in Argentina or in Bogota, and that's something. Of course, it's an event, so you plan more time to meet people. But I think there's also the size, and the London is decentralized.
It is really
there's so many neighborhoods, and when you take a step back, you're like, we have the biggest market makers are in London. A few of the biggest protocols. You have L2s like Aztec. You have so much in London. Consensus is a massive office.
A lot of the biggest fintechs in general, like outside of crypto,
exactly. And so actually, London is a very big crypto city. But I think because of there's something where we don't do a good enough job, I think, to connect founders here. And also, I think the regulatory landscape is hurting us here. Doesn't make London it used to be the most attractive place for fintech. I think right now we are not doing a great job. We talk about that in terms of the regulatory landscape quite a lot, and I do think that the FCA are behind and could move quicker. And we've seen how quickly the US has changed. And I mean, there's been regulation out yesterday from SEC, CFTC in terms of
token classification that was, incredible in terms of how extensive it is. Obviously, we've been waiting a little while for it, but that sort of moving things forward will be gratefully received, and I think in the UK. Your point around that there are a lot of people building in London, but we don't connect the dots very well. I mean, we think that we're quite well embedded in the community here in our little geography within London, but you're right. We go to places around the world, and suddenly half the people you meet are from London. You're like, well, why have I not met you before?
Yeah. Tempo launched today.
Really?
Yeah, this morning.
Okay. I missed that. Yeah, I've been head down with lots of meetings today. I think you're right. The crypto being adopted by Tradfi is definitely something we've seen in the last year. And for a long time, it was, the cliche, the meme was, when is Tradfi going to arrive in crypto? And I think it's now being revealed that was the wrong question. It was, when is the tech going to be good enough to be adopted by Tradfi? And what does that mean for the ecosystem going forward? What changes do you foresee with blockchain technology becoming more widely adopted? Maybe perhaps outside of what you're building with Ready, but more sort of maybe a capital markets level or an institutional level.
I think what's clearly happening is the blockchain being behind the scene as better rails for money movement, with the good and the bad. I mean, a part of it is just, okay, now we made Tradfi more efficient, and they will have higher operating margins.
That wasn't the idea.
Exactly. That was not the idea, but it's valuable tech.
Yeah.
And when you look at global payment flows, you realize how terrible it is in traditional system. And so it's very obvious how amazing stablecoin can be.
Let me pick at that a bit, because I've heard people mention this before. And if you're like me, you're like someone who has never dug into what happens when a particular payment happens. Is it really that bad? So if you are global, I mean, I tend to look more on the consumer side. Of course, yeah.
But if you look just at cost and timing, it can be days, and many dollars, and
many hops,
and move
many
money.
people
and
involved.
Then that's the thing. If you look at the other side, the payment providers, I mean, there's sometimes 3-4 players involved, and I'm not even talking about it being a multi-currency. Then it's next level. You have capital requirements. So people have liquidity in different markets and have to block cash. So it can be very capital inefficient. So I do think that just from a pure architecture technical perspective, for many of those businesses, just moving stable is just amazing. And so, but I think it has value as a technology. It's not our original vision of that we had now. The ecosystem had, but we shouldn't dismiss that. I do think we benefit from that. I mean, if you look at us Ready specifically, moving to more this, on-chain alternative to your bank, put us more in the stablecoin world than the pure speculative world. So we're already naturally, organically making that move. But I think Tradfi embracing stable is good because it means more people will have crypto assets.
Yep.
And yes, it's stable, but if they have stable, they can also have ETH or Bitcoin, etc. And so more people will have crypto asset, even though they didn't specifically look at crypto.
Yes.
And I think that's interesting. I saw today it was a crypto company helping a gaming company now make payment. And so you might have gamers playing with coins and they're actually crypto assets. Yep. And I think the more there are crypto assets in the world, the more, the better for the industry. And I think it gives that optionality. So you could be on a non-custodial stack, with a self-custodial stack with a decentralized blockchain, and an asset that has some control, like stablecoin can be frozen by actor. But then you have the optionality. You are one hop away from saying, I will hold ETH or Bitcoin or whatever, or a non-custodial stable coin in some way. So there are, at least we are equipped, people get equipped with the right tool. And that's really our view. People might decide to go all in and to really have ETH or Bitcoin in their wallet. And that will be their, emergency funds in case there is some global war or government turns against them. But day to day, they might mostly use stable. But, I think it's a gradient. Even stable are already a step better than, like, for example, if you take Ready, there is a real your card, I mean, the card is regulated. We offer you virtual bank accounts where you put pounds or euro, and now you have stable. And of course, those are regulated by and they can be frozen. Your card can be frozen.
Yeah.
But nothing happened to your assets. The bar for your asset itself. So the bar for your asset itself to be frozen is very high. You probably need to be a criminal or terrorist. And so, yes, your card, it's inconvenient. Now you can't pay with your card because they decided to freeze it because, who knows. But actually your assets are safe. You can move them tomorrow.
Yep.
And I think, so it gives them one extra level of freedom. And yes, maybe the best level of freedom is the non-custodial setup plus something like ETH or Bitcoin. But at least you have had an improvement in terms of like degree of freedom.
That makes a lot of sense. Thank you so much for coming in and chatting about all this today. It's been a wonderful conversation. I really appreciated your time.
My pleasure. Thanks for having me.